Hello everyone. I hope this message finds you fit and fine. My name is Shashank Tyagi and I welcome you all to our contest series of Indian polity based on Lakshmikant. This is third video on the same chapter, Center-State Relations. In previous videos, we have discussed legislative aspect and executive aspect. Today we need to focus on financial aspect of center-state relations. I personally feel that many students miss on nuances or miss on reading between the lines on financial provisions. And that is why a good amount of trap statements can be made by UPSC in upcoming prelims. Purpose of this video is to save you from those traps. That is why only thing that is required is your attention to me, not me, to this chapter, okay, to this subsection. So let's start. You know that center-state relations are mentioned in part 11 and part 12. And financial aspect are mentioned in part 12. So in part 11, we have already discussed legislative and executive aspect. Those who have not covered, you can go to the previous video. If you have any doubt from any section, you can shoot me a message on shashank.powerbeam. That is my Insta handle. I'll be more than happy to help you out. Now, financial relations are mentioned from Article 268 to Article 293. Okay. Now, we have to talk about tax, and three terms are going to be used in this video: levy, collection, appropriation. What's the difference between these? Levy means imposition. It means, take example, income tax. We wait for the budget day, and we want to see what kind of changes are made on income tax. Why we wait for union government budget when it comes to income tax slabs? Why not a state government budget? The simple reason is power to impose means power to levy tax on income is with center only, not with state. Okay, so levy means imposition, lagana. Okay, now collection. So second power is collection. It may be possible center has imposed a tax, but collection duty is given to state government. So we need to be clear about this, that it may be possible that the same authority, it means center, is imposing as well as collecting, or there can be a difference also. We are going to discuss it, but you should be attentive of these words. These are different. Okay. For example, now we have collected this tax. Okay, this collection has happened. Now, the third step, appropriation. Appropriation means decision to actually spend from this collection. To spend. Why you're collecting taxes? Obviously, to spend, right? Now, in certain tax categories, appropriation power is with center. In other tax categories, appropriation power is with state. So we should be having clear idea on which kind of taxes state government is having appropriation power. Although you need not to cram all the subjects on which taxes are imposed. Okay, that's not going to give you some cost benefit and in the exam. But you should be clear with the provisions, powers, connection. Okay, and the issues from means perspective. I'm going to give you an idea of that as well. Okay, along with provisions. Now, first let's talk about allocation of taxing powers. How taxing power is divided between center and state. You are well aware of union list, Schedule 7. Now, we discussed union list in legislative aspect as well as executive aspect. But why financial aspect? Because certain subjects mentioned in union list are of the nature where tax can be imposed. Okay, so in those matter, Parliament has exclusive power. Exclusive, I'm using the word exclusive power to impose tax. Okay, when it comes to state has similar exclusive power with respect to subjects mentioned in state list. Okay, so with union list, center has power. With state list, state has power. You can see that when it comes to state list, there are 20 subjects on which tax can be imposed. And here in union list, there are 15 in number. Then you should wonder, oh, state government has more subjects on which tax can be imposed. So states must be richer than center. But it is actually inverse. Why? Because matters like income tax, corporation tax, which give huge chunk of revenue to our government, is actually under the ambit of center. Okay? So it is not about number of areas on which you can impose tax. It is about the crucial areas. How many crucial areas are under your umbrella? Okay? So in this, you can clearly remember that Parliament actually collect the huge, you can say, majority of the chunk of tax revenues. And that is why Parliament later share this tax revenue with states as well. We are going to discuss it as well, but I think this difference is clear to you. A number state has more subjects. Now, when it comes to concurrent list, on concurrent list, both can impose tax. Okay? Obviously, their tax laws should not be in contravention to each other. So both the Parliament state legislature can levy on enumerated and concurrent list, which are 3 in numbers. Okay? Now, come to residuary power. It means those subjects which are not mentioned in state list, union list, concurrent list. What about those subjects? For example, a new area of business has come up, which was not there earlier. So that is why this was not expressively mentioned, not clearly mentioned. Now, who is going to have power to impose tax on that? Let me give you one interesting example. So you must have seen taxis roaming around in cities, right? And sometimes you see certain advertisement pasted on the outer layer of these cars, right, on these taxis. Do you know this advertisement on these commercial taxis are also taxed? Yeah. So it means consider that you have a commercial taxi. Okay, you have purchased a car and registered it as a commercial taxi. And now you think that I am the owner of this taxi and I am going to paste an advertisement of, say, your siblings company. Okay. So, and since you are roaming, your driver is roaming around, consider that your driver is roaming around. So you are thinking no one is going to ask me any tax. But it may be possible that one fine day, the driver's side will be knocked by municipal corporation people that you have to give this much tax to us. Okay. So it means there can be new areas of taxation, right, which are decided, at that point of time when they are discussed. Oh, this is a new area. Okay. For example, taxes on this digital advertisement. UPSC also asked this question in prelims, Google tax. Okay. So residuary power of taxation, that is the power to impose tax not enumerated any of the 3 lists, is vested with Parliament. So power is with Parliament. If Parliament want to give this power to any other authority, that is Parliament's prerogative. Right? Under this provision, the Parliament has imposed gift tax, wealth tax and expenditure tax. So I hope allocation of taxes is clear to you. Right? Union, center, state, concurrent, both, and when it comes to residuary, center. Okay. Now, so this I have explained you the difference between levying, collection and appropriation. Okay. For example, income tax. Income tax is levied and collected by the center. Right? Levied by the center, because example is budget, right, our union budget. Collected by center, because we have a income tax department which comes under central government, right? State government don't have any income tax department. They don't have, because they don't have any power to impose tax on your income, personal income, right? Income tax department is only with central government. Okay. Now, proceeds are distributed between center and state. So whatever is collected, the appropriation, it is distributed between center and state. Okay. Now, restrictions. Restrictions on whom? I'm talking about state. My friends, please give due attention here, because this area many students read superficially, right? but sometimes what you read superficially often actually pop up in your question paper, right? Now, there are three provisions which we need to understand from restrictions. Okay, first, taxes on professions, trades, callings, employment. In general, you can understand taxing on professions. So, in some profession, if you are conducting some trade, so one tax is that, oh, I'm giving income tax to the government. States will say, you are giving this income tax to center, not to us. And you will say, but I have read in Shashank's polity class that the tax proceeds from income tax is distributed with you as well, distributed with states as well. Now state will say, yes, they are distributed, but we are not quite happy with that. And that is why we want to impose a tax on your trade. You will say, what kind of tax? And state will say, tax on trade. Those people who are going to engage in this kind of trade, this kind of profession, which we are mentioning in our law, means law made by state legislature, will be taxed. But there's a restriction over it. This is the old provision, and that is why 2,500 per annum. But you should know, yes, this tax can be imposed, but there's a restriction, limit over it, right? And why this limit? Because you should be reasonable enough to impose the quantum, the kind of tax you are taking from people. Otherwise, people will actually start evading taxes, right? Now, second, so this is quite, direct one, but the trick is there in second and third, and it is quite easy to understand. Just read. Consumption and sale of electricity. Take example that there is an authority, at state level, which is actually selling electricity to center. Now, this law is saying, the provision is saying that if any authority working in state is selling some electricity to center, then no tax will be imposed on such transaction. You will say, oh, center is playing smart here. Tax on consumption, sale of electricity allowed, but no tax if consumed, sold to center or railways. Railways also come under center, right? So sold to center, if it is being sold to center, then state government cannot impose any tax on such consumption, such sale. Now, you should not misconstrue it like, oh, center wants to take electricity for free. No, I have not said that this electricity will be given for free to center or any department of center. No, I have just said the transaction is taxed as well. The tax is not going to be imposed. For example, you can, after this class, you can just take electricity bill of your home, and you will see that there's a tax also added on energy consumption or the rate which is actually charged on you. For example, you have consumed say 1000 units and you are charged 6 rupees per unit, okay, 6,000 rupees. Apart from this, there's charges like, okay, you have 6 kilowatt, connection, then there's a charge say 500 rupees. Now total amount seems to be 6,500, but you will see there's additional tax imposed there. Then the tax I'm talking about, that tax cannot be taken from center. Okay, in this transaction, that tax is not going to be used if it is being sold to center. Okay, one thing is clear, sold to center. Now, there's a twist in the third provision. Consider that there's a central government body, for example, NTPC. Okay, so NTPC is a PSU responsible for generating electricity. So PSUs are working in different states, right? Now, if this PSU is selling electricity to some entities, now can this transaction will also be exempted, or state can also impose tax on this transaction? Let's understand this. A state legislature can impose tax in respect of any water or electricity stored, generated, consumed, distributed, or sold by any authority established by parliament. That is why I gave example of NTPC, right? Power Generation Company of Center, right? Unit of center. So now this third provision is saying that if there is any central government body which is engaged in, say, water, electricity restoration, generation, consumption, distribution, then state can impose tax. So here the word is sold by. Earlier it was sold to. No tax can be imposed if center is taking electricity. But if central government body is selling electricity, then state government can impose tax. Now some of you would say, sir, you said restriction on state. Then how this can be considered as a restriction? Restriction hai. Take a look what is written here. Means this can be done, but such bill need to be reserved for the president. Should be reserved for the president's consideration and receives his assent. So it means a state government can impose tax on such entity that we want to impose tax on NTPC's transaction to different bodies, okay, because we want to use this tax to actually upkeeping or developing the interstate river and river valleys for developing, because if you are generating, say, hydropower electricity, so state has responsibility to actually do the upkeeping work, development work around this river valley. So from where you have to do it? From where you can do it? So you can do it from the additional tax which you are collecting from the central government bodies. Okay. So now you can easily remember it. Number first, it was tax on professions, but there is a limit here. That is why we are saying taxation. Second, any electricity which is sold to center is exempted from tax. State will not impose tax. Third is when central body itself is selling, yes, here tax can be imposed. Sold by, tax can be imposed. Okay, but this bill need to be reserved for president, and after president assent, then it can be cleared. Okay, so I hope these three restrictions are clear to you, right? Question can be expected. Now, distribution of tax revenue. So there was 18th Amendment Act 2000 mentioned in your Lakshmikant. Purpose of this amendment was that it enhanced the level of corporation tax and custom duties at par with income tax. So you will see what bought several central taxes at par. What does it mean? What is the meaning of at par with income tax? Let me explain this to you. In earlier slide I told you income tax proceeds are levied, collected by center but distributed between center and state. It is confirmed to you, right? Now, with respect to corporation and custom duties, same is going to be done. That was the mention, you can say that was the provision of this 18th Amendment Act, Constitutional Amendment Act. What does it mean? It means now states are going to get share from corporation and custom duties as well. These are such taxes which are levied and collected by center but distributed with states now after this amendment. I hope it is clear now. Now, moving to the next amendment, the most popular one, 101 Amendment. We are talking about GST tax. So GST has simplified the indirect tax structure in India. When I say indirect tax structure, means I'm talking about taxes imposed on goods or services. So it replaced many indirect taxes, tax on final goods. Okay. Now, there may be a question on which of the following ways represent the tax powers or established between center and state. Okay. So you need to understand these areas, means how tax is handled between center and state. You just need to remember it. First case, tax levied by center but collected and appropriated by state. Means center is imposed but given responsibility to state. You collect and you appropriate. You take decision on actually spending it. Stamp duties on bills of exchange, check, promissory note, insurance, transfer of share, excise duties on medicines. So although indirect taxes are being subsumed under GST, you need not to cram the areas on which this scheme of sharing is imposed. Okay? You need to understand the provision. Clear? As I told you, cost benefit we need to keep in mind. The amount of time you spend and the amount of marks you can actually gain in exam. Now, taxes levied and collected by center. So here you have two cases with center. Earlier you were having just one case with center, now two cases, levied and collection by center and assigned to the state. Please remember, I'm focusing on the word assigned. Assigned means now it is given to state. We have imposed, we have collected, now given to state. You actually appropriated. So tax related to interstate trade, commerce, interstate trade. It means tax which is going on if one thing is actually being produced in one state and it is being sold in other state. For example, say one sari being manufactured in city of Surat, Gujarat, and it is being sold in Madhya Pradesh, UP or any area. So this is interstate trade. So any tax which is imposed on interstate trade will be levied and collected by center, but will be assigned to state. And in this case, after the coming of GST, this is shared between these states. Means center will say, no, I am just imposing and collecting. This is going to be divided among you. Okay, this is second formula. Third, taxes levied and collected by the center. Levied and collected by the center. It is same as the second point, but twist is in this distribution thing. It means distributed between center and state. Imposition we are doing, collection we are doing, but this tax is going to be shared between center and state. For example, taxes and duties referred in union list. So the taxes which are imposed and collected by center, because these are exclusive power of parliament, then these are actually shared with state as well. Okay. Now distribution of non-tax revenue. First of all, what is the meaning of this non-tax revenue? Tax you understand, right? Binding, amount which need to be paid by people to the government, right? But what is non-tax? Non-tax is, for example, fees. Means giving tax is your responsibility, that you have to give tax, right? But for example, fine. Now tell me, is it your responsibility to give fine, challan to the government? No, right? So it means fines, profits. Yeah, governments also have profits, right? PSUs through government companies, right? So fines, profits, these are example of non-tax revenues. And state government and central government, they collect a lot of fines and lot you can say different revenue streams of profits as well. They have profitable ventures, right? So now in this aspect, they have to deal with their respective list. Means the areas in which you can actually impose, you can collect that are yours, right? So a quite independence in this area of non-tax revenue. Now coming to grants in aid. What is the meaning of grant? And is it different from loan? Yes. When loan is given, it is expected that you are going to pay me back under these conditions, maybe interest. But grants are, I have given you this amount and I don't want this amount to be back. Just take it. So why I am giving you grant? To chill? No, I am giving you this grant so that this can be spent in a specific area. For example, for development purpose. So there are two kinds of grants. One are statutory grants. The word statutory itself represents law, act, right? So Article 275 says that there are certain grants which need to be given by center to the state. It means are given to the states on recommendation of Finance Commission. It means you have to do this. There's no way out, right? But when it comes to discretionary grant, as the word discretion says, Article 282, it says it is discretion of center. If center thinks, yeah, this particular state is having these financial crises, this particular state need to spend more on education, health, or other areas of development. So there, center can actually give it from its own side. It is not on the basis of Finance Commission's recommendation, right? So there's a difference between the two. Now there are other grants as well. So one is grant in lieu of export duty. What does it mean? You can take example. For example, a state government wants to increase manufacturing and export in its area. And earlier, this state government used to take some export duty, right? If you are sending these things, then you have to give this particular tax. Now, Center might say that, okay, in this area, there's good scope of production. Why don't you give rebate to the people who are investing in your area so that they can easily manufacture? Taking rebate from you, they will be able to sell this product in some other country or some other area on cheaper rate, or you can say on a better rate. If it is being sold on better rate, then there will be high demand, and if there's high demand, then there will be more production in your area, more people will get jobs. Fair deal, right? But it may be possible that state is dicey. State will say, oh, this is going to create revenue losses for me. So in this case, center can come into actually picture and they can compensate. Oh, we are going to give you grant. Okay. Now coming to Finance Commission, Article 280. Finance Commission is a constitutional body. Mentioned in our constitution, it is a quasi-judicial body. Not having full judicial function, but having quasi-judicial power. Although many people question, we have not seen any work of Finance Commission where Finance Commission is acting as a judicial body. Why are you saying it is a quasi-judicial body? My friends, such status was given to it by Constitution, keeping in mind that Finance Commission is going to decide on or give recommendation on division of proceeds, these grants between center and state. So it may require, an area where other states will actually come on Finance Commission and say, these are my grievances, this formula is faulty. So in that context, you have to work as a judicial body also, quasi-judicial body. Okay. Now, it is responsible for giving recommendation on two areas, chiefly, means mainly. Number one, distribution of tax proceeds, total proceeds between center and state, and number two, it also gives recommendation on supplementing the resources of state for Panchayati Raj and local government bodies. Okay, that is also prerogative. Please remember, we are talking about Finance Commission, the central body. Augment the consolidated fund of the state. It can give recommendation to the state how you can augment, improve your financial status, how you can supplement the resources of the panchayats and municipal bodies. Okay, important point. Clear? Now, protection of state's interest. What does it mean? Means if Parliament is not actually having any limitation on its power with respect to changing the tax proceeds or varying or adding any tax, then it may actually negatively impact the interest of state. So we need to have certain protection there. So one is imposing and varying. Imposing means to impose something new. Varying means there's already a tax, but you are varying that, in which states are interested. It may be possible in a particular area, center has already imposed a tax, but center has varied this tax in a manner that industries in this area are going to be negatively impacted, and which is going to impact the other tax proceeds or interest of that state. Don't you think? This is a valid argument that state government will say, although you have varied this tax, but the future of my area, my government, although whole is India, but I am also responsible for development. So my resources are going to be impacted due to your variation, right? So in this case, it is said that prior permission of President is required before actually presenting this bill in Parliament. Okay. Although it is said that this is not that much security cover, because President has to act on an advice of Council Minister, and if Council Minister has decided, because ultimately government is having power to actually vary this tax. So if they have resolved this, then how can actually President stop it? But this is you can say a layer, additional layer, so that if prior recommendation of President is added, it may be possible that President from its own side, since it's a layer, can actually bring some insight on this issue, that there can be possible ramification for this also. Varying the meaning of agriculture income. As you know, agriculture, prerogative of state. So if you vary this, it may hamper the state interest. Impose any surcharge, additional charge on any specific income category or area. So in this case, President's prior recommendation is required. Okay, please remember these three cases. Now, borrowing by the center and state. Now, if I ask you, from where our government, be it center or state, get funds, arrange funds to be spent on these developmental activities and daily activities, salaries and other expenditures? So we'll say, sir, one thing is, friend, when it comes to state government, one source is their revenues, tax revenues. Other maybe non-tax revenues. Third, maybe grants, which they are getting from center. And fourth are borrowings, right? Means taking loan. Now, center and state both can take loan. One thing should be clear. Now, the point is loan from inside and outside. So, answer is that center is allowed to take loan from inside, means our own banks or banks working in our territory or other financial instruments, or from outside as well. And Parliament is there to fix a limit on this. But as of now, there is no law made by our Parliament to put a limit on the borrowing capacity of a center. So you can read, central government, state government can borrow either within India and outside. Not abroad for state. यहाँ पर I have mentioned the word D. It means a state government cannot borrow from other areas directly. For example, Uttarakhand government took loan from Asian Development Bank, ADB. So this loan was actually cleared because central government was there clearing this file. Yes, you are allowed to take this loan. So it means state cannot take loan from abroad on their own. Center's role becomes mandatory. Okay, within the limits fixed by Parliament, state legislature. When it comes to limit, limit can be fixed by Parliament, state legislature. No limit so far, as I told you, no law has been made. A state cannot raise any loan without the consent of the center. And the reason is, it may be possible that a state government has already taken loan from center. And now state government is taking loan from other central government body, say RBI. So central government will say, you have already taken loan. Why you are taking additional loan? Just tell us how you are going to repay, how you are going to maintain your sound financial balance. So that's why this provision has been added. And my friends, this particular issue becomes more important, especially in this pandemic time, because states have said that our primary source was revenues collected from state and different tax proceeds. But due to you can say downturn in our economy, due to these lockdowns, the tax revenues have actually soaked up, right? Second is this grants. But central government has not given grant in this pandemic period due to this financial issue with the center as well. Now, what is the third source? Borrowing. So states have said that our borrowing limit should be increased. Now, my question to you, what is the borrowing limit of states as of now? Just mention in comments. Do you know a particular law which sets borrowing limit of state? Come on. FRBM Act, Fiscal Responsibility and Budget Management Act, 3.5% of the state's GDP. That's the maximum limit that state can borrow. Although this limit can be changed in special circumstances by Indian Parliament. And that is why this point was raised, that it is valid to raise it now, because these are extraordinary times. We have not expected such downturn. Now, intergovernmental tax immunities. It means immunities where center should not impose tax on state and state should not impose tax on center. Just give this attention here, because this area is also like students actually just turn the pages, but I feel that there can be a question. First, Parliament empowered to remove this ban. It means there's immunity, but Parliament can actually make a law and say, I don't want this immunity in this area. State, you can actually impose tax, but you know that this is not going to happen. Now, property may be used for commercial and sovereign purpose. It means central government department is having some property, okay, in state obviously. So now they may be conducting some commercial activities there. Means central government company has made some shops there, right, doing some business there. So can state government impose tax on such property since it is being used for commercial purpose? No. For sovereign purpose? No. Right? It means this is a immunity. And it is quite easy to remember for you. Same kind of immunity is available to state government. The state government is also saying, we are having this property, say in Delhi, and we are using it for, say, commercial purpose, say Andhra Bhavan, Gujarat Bhavan, right? And we are having these canteens there. People are flocking for delicacies, but you cannot impose tax on us, right? This is an immunity there, okay? Corporation companies, if central government has some corporation companies, so they're not immune from such taxation. State government can impose tax on them, okay? Now, when it comes to exemption on state, means of state from center, please remember there are 3 points. First, ban can be removed by parliament themselves. Second is commercial sovereign, kaisa bhi use kare, no taxation by state, okay? Corporation companies, tax can be imposed, no immunity. Here, property may be used for commercial sovereign purpose, same. State is also having this immunity. Second, if parliament provides commercial function, may be taxed. It means if parliament itself has provided, has supported state government to have this business, sustain this business. So it is like now parliament will say that it is not your own business. We have also partnered in that. Since we have also partnered in that, we want to actually impose tax. So this can be done. Center tax or income local authorities. So central tax property or income of local authorities. So local authorities can be actually exempted, means they are having immunity. And immunity from central taxation, okay? Corporation companies, they are not going to have immunity, okay? So I hope this is clear. Now, effects of emergency. What is going to happen? Number one, President can actually reduce or cancel the promises which were made by center to the state. We are going to give you this much tax proceed, now we are not giving. We are going to give you this much grant, now we are not giving. So it means this can be done in case of national emergency. Second, such modification continues. Now this is an important twist. UPSC will make a statement when national emergency is in place, financial relations between center state are going to be changed, and consider the giving of grants has been shelved now, or sharing of tax proceeds have been shelved. Now they are going to make some words they are going to use, like this particular provision will cease to exist after 6 months from the removal of national emergency. Now, since you have read this clause, this particular phrase, that this particular law is going to be applicable only till 6 months from the cancellation or removal of national emergency. So that is why sometimes students actually link this with everything, but that's not true, okay? In case of financial aspect, this particular provision that like President has cancelled or reduced, this will remain in force till the end of that fiscal year. Such modification continues till the end of that fiscal year, financial year in which the emergency ceases to operate. So consider that emergency ceases to operate in, say, January 2022. But this fiscal year, financial year is going to continue till 31 March. Right? So now states will not say, oh, now it has been shelved in January, so from February we want the due of our tax proceeds. You cannot say that, because it is going to continue till end or cease of this financial year. I hope it is clear. That's why I've put star point here. Financial emergency is imposed. What is going to happen? Then center can say, you have to ensure the canons of financial propriety. It means save wherever you can. Second, reduce salaries, allowances of every class of civil servant, means government employees. Along with this, including high court judges, because we are talking about state, right? To reverse all the money bills and the other financial bills for the consideration of President, to reserve. If you want to make some bring some money bill, because we are already in financial emergency, that you have to reserve it. President is going to see whether it is fine to actually continue that or not. Okay? So these are the 3 provisions. I hope now financial aspects are clear to you. So if you like the video, you can like the video, you can share the video if it added some value in your preparation. As I told you, you can connect with me on shashank.powerbeing, that is my Insta handle and personal handle. And you can also connect here for Telegram. This PDF will be available here. Okay, I upload these PDFs once in a week. All the PDFs are updated there. So see you in the next video then. Keep learning, keep growing.